Alright, in the last class we created all these chart of account that we have here, and we have all these guys here now. The chart of accounts, we are getting ready. These are posting entry we are going to be using in the course of transaction. Then I said we can check the progress from general ledger, okay, the chart of account. And I also talked the other time talking about the summary of reports as a list. Can you see it? So the same thing we have here, we still have it here. So by the time we have those values, the value, running value, the current balance, everything will be here. Right? Okay? And this is also compatible to, you can also split this information to Excel, to PDF, to direct formats as time goes on. Right? Okay? So right now, let's set the opening balances for only the one that have opening balances. Like now, how do you set that? So all the use expenses, you don't need to bring it in. So if you want to set the opening balances for any company, what you just need to do is you need their current financial statement or the last audited financial statement, right? So those are going to be the opening balance. But if they say they don't have, okay, you can also continue like the main thing, you need their bank balances. That's the most important. If they don't have anyone, some will say we don't have, right? Their bank balances. So we are going to have a demo bank balances for this demo bank balances. Then you also need their fixed assets. So we simply mean anything money, financial stuff we are using, they are demo, they are not real. So we make sure that it's good for you as much as possible, right? So I think we will have a company as based on now, we just put it just stuff like that, right? So to get that ready from here, so as I said, some will have, some will say they don't have. So they don't have, definitely they will have a running account. Even though if it is 1.1 naira that is there, get it started with. Okay?
No.
So
Or you go to their last audited.
That's what I'm saying. Some will say they don't have. Some has not even started, some don't even use auditor. Do you understand? Some you are going to be the one to get them started. Maybe someone like, you are putting all this kind of a thing that you mean you don't have a financial statement? What if you want to borrow money in the bank? Remember they will ask you for all this. The standard of your account, the state of your account. So it's that time they now begin to think of, oh, we need to have this. It's very important. Some don't look at it as until they fall into problem. Right? So I'm just trying to give you different scenario of how we can get this. It's either from the last audited financial statement or they will have the bank balance. So just let them know, okay, we need all the bank balances. If they have the last audited this thing, they will have the value of the assets. So we need to value the assets. Do you understand? Like all these checks that you guys are sitting, these are part of function of it. This is part of it. These are computer intelligence. So value. What's amount? How do you get the value? Let's have the receipts. Anything you buy, you should get receipts. And there's a file for receipt. Get all receipts, sort them. This. Do you understand? This is the way we do setup. They will have receipts. Okay, this is how much, this is how much. So we know how much belongs to function and fitting, how much is generator, how much is motorbike, how much is. And that's what you're going to have there. And until you started depreciating, you won't have any value on accumulated depreciation. Do we get that clearly? So it's very, very important. So now, to get that started, just go to, after you've gotten either their financial statement, the last one, or their bank balances, but you still have something to get started with, right? So you come to this maintain chart of accounts. I guess I need to close this and go back there. Maintain chart of accounts. So when you do maintain chart of, can you see account beginning balance? That's what we call opening balances. Otherwise, those are opening stock when you are doing inventory. Do you get it? Yeah. So we have this now, right? So select. You just need to select accounting period. I told you this guy is usually 2 years. Guys, you are seeing 2015, 2016. So here now, don't want to do January, this is January 31st. I don't want to choose January 31st, right? But I can work within January 31st. So I will choose August because we are in August. But I can still go back, right? So after this slide, we'll learn about changing accounting period, right? Reason for changing accounting period, the state of your account last month is not your state of account this month. And P3, by the time we move to, if your system date is correct, by the time we move to software September, to brought forward everything on last month. So it's only brought forward between the balance sheet. So if you want to see the detail, you need to change the account period to see the detail. Right? So, this is not my value. You've moved from one month to another. Right? So just change the account period. So this is your otherwise known as your trial balance. That's the question that we should have for school. This trial balance to solve the question, right? This is trial balance. It's on trial balance that you have all the values that you now get to do your P&L, your balance sheet. This is your trial balance. That is okay. Can you see? Trial balance is made up of balance of all accounts. In order for the trial balance to be in balance, the sum of assets and liability, assets and expenses, do you get it? Should be equal to the sum of liability, equity, and income. Right? Income, net income is the difference of income and expenses account value. The income and expenses values make up of the net income are already included in the total. Okay? Trial balance, can you see this very well? Different post to beginning balance equity, that's your retained earnings. The difference. That was it. Balance, carry, down. Do you get it? So watch. Petty cash, you ask them, how much do they have? They call it, you see this, do they have on their personal impress? You call it impress in your company, have you? You call it petty cash. Some company will call it impress. Do you understand? Okay, from experience, right? So how much you have? We have 5,500 naira left. As at that point, you are picking. Make sure that any day you want to do this, you need to finish this. You don't need to stop. Finish this on that day. So that you know that you pick the value for that day. So from that day, they start running with this. You get it? So as soon as it's 5, at this point, once our chart of account is correct, you don't need to think of which one is going to debit, this one is going to credit. Because your chart of account type is okay. Can you see what happened there? That's why that place is very important. Can you see that all the assets are expenses automatically debit? You put it debit and income, automatically credit. So because this is a cash, it's an asset, what is asset? You cannot put it there, it will not even be active. And you only got it because you get your chart of account creation correct. So if there's a problem there will be a problem here. Do you get it? After this, I'm going to give an assignment, and the assignment is I'm going to have a whole lot of chart of accounts to learn from, so that I know which one is this, right? Okay. So GT Bank, how much did the company have there? 560,000 naira. 560,245. Okay. UBA, what did the company have there? 1.250674. Okay, are you getting it? Web design, any product sales they've done, you don't put it now. We are talking about the new sales now. You understand? So the last financial statement that they gave you, that's going with the financial statement. You are not at that state. You are picking wrong thing. But cash still very, very important. The current cash, because most of the things, every other account will not function without cash. Yes. No one. That's why you need this, even though there's nothing. You get some places and some auditor will say, hey, you can start on the blank note. There's nothing like starting on the blank note. You don't have anything, you must have a cash. Okay, we don't have anything on cash. You mean you have a zero? Do you understand? It's possible to have a zero. But even as you have a zero, you have minus 1 point so in the bank. Let me have it. That's the note to start with. Do you understand? We are going to face it if you actually want to do so. Product, income, expenses, you don't have it right now. Do you get it? Then, but one thing, you have debtor. People that have been owing you. You also have it. Do you get it? You have people that have been owing you. You also have the total creditor. You have all those things. So how will you come with them that you don't have? You have. So you also get those values from maybe hardcover or wherever they keep the records, or eyewitness, whatever. Do you get it? To get started. So on our customer, which is our debtors account, how much are they currently owing us right now? Do you understand? So just we have about 255,423 naira owing us outside. How much are we also owing? Are you getting it? Are you strong with this?
Yeah.
These are your opening balance. This is your trial balance that we are used to solve the accounts. Okay? How much are we also owing? We are owing about 970,230. Sometimes it used to be like that. We owe more than people who sell most times. Right? We are trying to be as realistic as possible. Sales tax, if you have not paid, you are owing, they have been accruing it for you. You put it. Right? Maybe you have owned up to like 25,000, 350, 360. Right? Are you following? Yes. Stock, you can get total inventory of a stock from the products and services. You don't put that, and we are going to set up inventory management fresh. And all the value that we get from storekeeper or whatever, that's what we are going to use to set up. And those two go to work with this guy. Like, so traveling, all these expenses you don't address it because you spend it. Rent. So if you have the upfront payments, you pay for prepayments. You have deducted it to maybe like 12 months, right? Which is 120,000, if it's 30,000, right? So you have spent like maybe 7 months. So you simply you have 50,000 naira left, right? So whatever you have left, go to the year for your prepayments.
Yeah, the rent, the other one is
yes, yeah. Do you get it? So let's assume that we are currently paying for the office rent now. Maybe if you are paying yearly 700,000, right? Office rent. If you are paying 700,000, and you divide 700,000 by 12, you have 58,333. Do you understand? So this 58,000, that's on a monthly basis. So let's now assume that you paid for like 7 months. 58,000, right? 333 times 7. So this gives you 40,000. Sorry, 408,331. So 700 to 3 minus 408,331. So you have this. So on your remaining prepayments, so since you are paying 700,000, this is we pay 7 months. So the 7 months that we pay will be 408,331. Do you understand? So this is how it is. Newspaper, all these are wash. Do you get it? Right? So accumulated depreciation, but we also have fixed assets. Do you understand? So after you value all your assets, for example, the furniture and fitting, you get the value. So the value is what you are going to put here. What is what as at that point. Okay? So these are part of fixed asset management. But this application is also capable of doing that. It's not all accounting applications that do fax. They call it fax. In fact, there are some applications that you just develop fax. This certain management system, right? So here now, trying to think of what are fixed assets. Okay, maybe our fixed assets for furniture and fitting. All those things that we have spent here, our office, table, chair, demarcation, and some other, maybe like 1.6 million, right? 1.6 million. You get it? Generator we are using maybe 750,000. You get it? You need to know the value. How do you get the value? From all the receipts. You get it? Then computer equipment. So just check the laptop. 560. 560. Are you getting it? So then accumulated depreciation. So we need to also calculate like this one now. When do we buy this guy? So all the month that has gone before this, we are going to calculate the depreciation on the percentage. There's always a standard accounting format for this. It varies for different organization. For like generator is 10%. Computer is also 10%. Furniture and fitting is also 10%. Do you get it? Building is 20%. Do you get it? Yeah. So and so on like that. Remember your straight line method now of depreciation. Hope you are getting what I'm saying. So you do for furniture and fitting this. Actually, what I want us to do is, I would like us to do this depreciation practically. The way it's charged and how we post and how it's come to this place. I don't want to put it here. Do you get it? But what we do is that if you have done some previously, if you have done some previously, it only comes if you have the financial statement, the last audited one. You have this. But if you don't have the last audited, you will not have it. Do you understand what I'm saying? Yeah. So if you don't have last audited, you only have the receipts to get all this value. But immediately you finish the account, you post all the money that have gone by for that reason. Why do you need to do this? So that you know the lifespan. You know when you need to be getting ready that this stuff will die. Do you understand? That's the essence of that. So if you look at this now, the total of all the debit side, assets and expenses already 5,664,842. Then income liability, all this one is already 1,025,500, and the difference between the both sides is 4,639,200. So that difference is what you are posting to this. You stay early. And that's why I also have the different process to beginning balance, you put it, right? So that 4, don't push comma, don't push space. 4, 6, 3, 9, 2, 5, 2. You know, I didn't put comma, I don't put full stop. Then press tab or enter. You understand? And you have what? 0. And what they say it must be 0. It's like it's been mentioned somewhere. Okay? Trial balance is made out of difference between, in order for the balance to be balanced, the sum of other exposing. You understand? So after you do this now, the next thing you need to do is save. Sorry, okay. So once you save this now, all this will go to different account section. Income statement, financial statement, your balance sheet. All of them are still under financial statement. So just save. So let's see what we have done so far. When you come to your report, financial statement, under balance sheet right now, just double click and say, okay. Can you see? Do you see what we have here? Balance sheets are part. But we need that start our account generally. That is why you have blank. So in the next class, For the purpose of that, I'm going to change the next class. We are going to learn about changing accounting periods. Right? Thank you for listening.